Good day, ma'am. I am Lady May Patak, a BSHM 2A student. And for today's topic is about Organization for Finance, Chapter 3. Inasmuch as the primary purpose of a business enterprise is to make profits, the handling of the firm's finances is, therefore, extremely important. Money is needed to start the business. It is needed when the business is in operation, and it is needed when the business is expanding. Capable handling of finance provides money for these three purposes as it is needed. The financial function. The financial function is essentially concerned with the management of monetary affairs, with the raising and expanding of money. It may not be dramatic a function as manufacturing or sales, but it is equally important, and very often its direct handling is retained by top management. Financial functions calculate financial information such as net present value and payments. For example, you can calculate the monthly payments required to buy a car at a certain loan rate using PMT function. The capital pool, savings and investment. Where does the money come from for the financing of business enterprise? Savings are generated directly and indirectly by individuals, business enterprises, a variety of institutions, governments, and others. These savings flow into the capital pool or market through many channels. The markets is a network of many institutions, channels, and processes distinguished by the source of their funds, by the different areas they cover, by the different types of loans they make, and by the variety of borrowers they serve. A non-corporation can rely on a owner investment to provide financing to the company's business activities. If non-corporate owner does not have suitable credit, that person may not secure loans to finance the operation of the business. Financing the non-corporate enterprise. In the case of the single proprietorship and the partnership, the initial capital comes from the individuals directly interested and possibly through the loans and investment that friends are willing to make in the business. Initial corporate financing. It is the corporate enterprise that is most concerned with the problem of capitalization. Commonly employed in corporate financing are the corporate securities such as stocks and bonds. Financing day to day operations. Once a business is started, the money requirements of the company are continuous for goods, wages, and other expenditures of a going concern. Everything a business does result in money coming in or going out and in property being bought or sold. Cash position. There should be enough money available to pay every obligation when it is due. Such money expect for initial capital and subsequent expansion should come from cash sale and from collection of amounts receivable. Financing seasonal business. Quite a number of businesses are seasonal in nature. A summer hotel, for instance, is a highly seasonal business and unless it is located in a high area or in a tourist spot or beach resort territory. It does, it does no business during the rainy season. This is a business which has a lively demand during hot season and little, if any, in the cold months. There are many other industries that are seasonal, though not to the same extent. The different functions of banks. Banks have two functions. They act as middlemen between savers and investors. That is between the supply of a demand for capital and they supply the principal means of payment in modern communities, back credit If the banking system is working properly, the middleman function should bring out continuous equilibrium between the volume of saving and the volume of investment. Financial institution. Banks can really facilitate the saving investment process by performing one or more of the following general functions. 1. Gathering, disseminating, and using information. 2. Purchasing, holding, and selling securities. 3. Providing diversification and insurance against risk for savers and depositors. 4. Increasing liquidity to those who part with money and hold other claims, securities. 5. Explain different kinds of credit. Short-term financing traditionally is used for seasonal purposes, for example, to build an inventory. 8. Trade credit. Normal credit forms expanded to firms by their suppliers. For example, if company A orders 1 million chocolate bars from company B, then the payment terms could be such that company A has to pay within 30 days of receive the order. This arrangement between the two companies is generally known as trade credit. B. Secured borrowing. Likely to provide more money to most companies than trade credit, a secured loan involves borrowing against accounts receivables, inventory, machinery, equipment, vehicle, construction, buildings, or a contract of some type. Such loans are available from banks, commercial, finance companies, and a few other financial intermediaries. For example, assume an individual takes out a $170,000 mortgage for a $200,000 property after making 15% down payment. The property serves as the security in case of default. Say after 2 years, there is $113,000 outstanding on the mortgage and the borrower defaults. The financial institution will liquidate the property at the current market value and use the proceeds to pay off the mortgage. That if the market vault is less than the outstanding mortgage value of $113,000, the financial institution will cover what portion of the mortgage is it can and then determine if it's worthwhile to pause the borrower. If the market price exceeds the outstanding mortgage balance, the surplus is distributed to the owner after all mortgage debt is satisfied. C. Unsecured borrowing. Unsecured borrowing, short-term loans, lines of credit, and revolving loans. These are called unsecured loans only in the same that they are not tied to a specific asset or group of assets. D. Paper and notes. Short-term money is also available through two-name or two-name paper, various types. 1. Acceptance financing. Most common of such paper, which can be used as an example, is the banker's acceptance to borrow money through this mechanism. The borrower arranges a line of credit with banker and then issues a series of notes payable in 30 to 180 days. 2. Commercial paper. Usually issued by large, well-run companies, these consist of unsecured promissory notes broadly similar to those which forms the basic for acceptance financing except that they are not countersigned as accepted by anyone. E. Captive financing. Large companies which sell products against installments, lease, or rental payments may wish to consider establishing their own finance companies. While such a company will be lending rather than borrowing. A captive finance company with a common record will be able to obtain highly leveraged borrowing against its own name rather than that of the parent company. Intermediate term financing depend on large measure-use prediction of the business climate, company operations, and cash flow, the extent to which lenders have confidence in the managerial control and forecasting abilities of the borrowers is therefore crucial. A. Leasing. One of the more popular methods of obtaining intermediate financing or long-term financing involves the use of leases. Long-term financing. The longest-term financing is with equity, which occurs when investors turn over cash in return for a part ownership in the company. A. Debentures. A far the largest volume of long funds is made available to companies in form of terms loans, either secured or unsecured. B. Bonds. Government financing can take the form of direct governmental involvement, or there can be a government programs to facilitate borrowings in other ways, such as by providing government subsidized or supervised insurance programs. Off-bank financing refers to financing which does not appear on a balance sheet. For example, a relatively strong corporation may guarantee the indebtedness of a subsidiary or a weaker company with whom it has a business relationship. Petty cash. Although the company usually uses check in paying bills and most other items, it is necessary occasionally to make small payments by cash. For this purpose, a certain sum of money is entrusted to the cashier sufficient to take care of ordinary cash requirements. This money is called the petty cash fund. Paying for good purchase. When the company buys goods from others, it receives a bill or invoice for the goods purchased. Checking is done in order to be sure that the goods have been received and are what were ordered. Maintaining bank balance. Care must be taken to guarantee only that the bank account is not underdrawn, but that other requirements are also met. The handling of checking accounts by banks involves considerable expense of the part of the bank. Estimating cash requirement. How could the treasurer know how much money is to be required at any stated time in order to have needed funds available? How could the treasurer determine the amount needed for routine expenditures as accounts payable, utility charges for light, power, gas, telephone and telegrams, the current purchases, and for no routine expenditures? There are readily known factors of expense which help determine cash requirements. These requirements may be 1. For employee payroll. This is one of the first routine expenditures of the company. Payrolls have to be met every week of every 15 or end of the month. For utility service, the usual utility service, telephone, telegraph, light, power and billed and paid monthly. These cash requirements can more or less be routinely predetermined. 3. For current purchases. Next are the invoice purchases. If the treasurer is consulted before proposed purchases are consummated, he will now He will know in advance when the invoice will be due and can plan accordingly. 4. For no routine expenditures. Usually expenditures such as the purchase of special equipment or items that may amount to more than a stated sum must be planned for. The company commitment. Commitments are made. They are entered on a commitment sheet, which show to the treasurer at all times how much money is to be paid out and when. The sheet must be always consulted before additional commitments are provided. The budget. Well managed business are operated under a budget plan by which an estimated of expected income and expenditures of the company is drawn up in detail, showing where the money is coming from and where it will go. Purposes of budgets. Stated briefly, the purposes of budgets are 1. Planning. A systematic and unified plan of activities for designated periods of operation. 2. Control. A standard of measurement of result against which variation from previous plans become evident. 3. Coordination. Activities become a part of a plan for the enterprise as a whole. Democratic processes basic to the construction and operation of a budget tend to bring understanding and unification of departments and personnel. Protecting the securities of the company. Protection of the company's property is another function of the treasurer. The securities of the company may be kept to the company's own vault, but probably the safest place to keep all securities in the safe vaults of a bank, which are equipped with the locks, making impossible the opening of the vault before a fixed time earlier set. Managing the real estate of the company. Money and securities are not the only properties of the company that the treasurer must protect. If the company owns real estate and buildings, the treasurer must see that the taxes are paid when they are due, the rents collected if there are tenants, repairs made when necessary, insurance taken out and renewed, and the making of improvements properly supervised. Pay taxes when due. Payment of taxes due on the company's properties should not escape the attention of the treasurer. At the stated time each year, the company is billed for local taxes on its property. Bills for collection may be lost in the mails of Messant, and the non-reset of a bill is no excuse for not paying it. C. The rent are collected. The collection of rents from the tenants of company-owned real estate requires a good follow-up system for getting the money when due. Some tenants are up to date in the payment or rent, however, there are usually some who delay the payment for one reason or another. Leasing company-owned property. Leasing company-owned property is another responsibility for the treasurer. It is necessary that leases are drawn properly, that the company's interest is protected. Maintenance of the property. When repairs are necessary, they should be made promptly. If the property used in company operation needs repairs, there is the possibilities of accidents to employees or damage to other property. In addition, there is the lost time due to the inability to use the impaired property. Insurance protection. Adequate insurance on the properties of the company is another responsibility of the treasurer. Insurance protection is not incidental to the operation of a business. It may be vital. In carrying insurance for the company's properties, the following consideration shall be taken. First, comes a survey of the risk that the company faces. Second, A survey of the possibility of reducing this risk by decreasing the fire of or accident hazard. Third comes the analysis of the insurance available. Fourth, the procuring policies that cover the risk against which protection is desired. Last, but by no means least, it is renewal of insurance policies before their expiration leaves the company unprotected. Uses of credit information in the Philippines. Our financial system now operates on the basis of huge amounts of information concerning large and medium scale business units, governmental units, domestic and foreign, and many other institutions that are actually or potential participants in financial markets. The basic data come from many sources: published balance sheet and profit and loss statement, reports to the Securities and Exchange Commission and other regulatory government agencies, reports to stock exchanges, special investigations, and so on. Information sources on financing opportunities. 1. Short-term borrowing. Most important source and possibly on loans up to 20 years is the company's bankers. It is from the person or from the move sophisticated bankers to whom the company's own banker will introduce the financing offer that the officer can lean with one exception: what short-term financing are available. 2. Useful, up-to-date information on long-term borrowing may be obtained from the corporate finance department of any money center, bank, or from a similar department in the office or of a major regional broker. 3. Advice on the placement of equipment is available from members of the underwriting fraternity. 4. In the area of background reading, excellent practical and occasional papers and disseminated by leading banks and underwriters. 5. Explain fully the difference between stocks and bonds, the reason why one of and not the other is issued, and how their issues is regulated. And that's all for today. Thank you for listening. Have a nice day.